Hello again, traders. Right, I this is take two of this video, take three actually, because I was watching it while it was actually recording it while it was actually hitting or moving up, and I messed that up, got distracted, and then I made another one, and I forgot to mention the beauty of these things here. So I thought I'd just do take three, and look, for traders that already follow me on Twitter. Apologies if I'm repeating myself, but you don't really need to watch my videos anymore because hopefully, if you followed my advice, you're away um, just concentrating on your own charts and stuff now. So, but what I'm trying to do really with all my recent videos and things, or change tack, because I made the mistake of clicking on a few links. I don't ever get involved with what other traders do if I can help it, because there's no need. There's really no need. Once you've decided your way, as it were, multi-time frame momentum, then that's all I want to worry about. But I clicked this one that said 2B reversals are brilliant, or whatever, something like that, and it was by I can't remember, I said it before, but I've even forgotten who they are. And it just annoyed me because, it makes everything look so simple, and then they close the video by trying to flog you some indicators that are, all over the internet for free. And they're no better, they're no different, and you shouldn't buy them, basically. You should buy, if you're going to spend money, then really and truthfully, books are worthless, live rooms are worthless, live trading rooms where they're all just thousands of people watch someone like Raja Banks there taking trades, and they might get a winner and then lose it all again. What do you do with the other 23 hours in the day? So I'm just trying to teach or guide people the right way. These I've mentioned it before, so I'm sorry I'm banging on, but these waiting for times of the day to trade is stressful, unnecessarily stressful. Waiting for liquidity traps is not right, because I don't know what they're trying to flog you, but suppose you thought every liquidity grab was a opportunity to reverse, then you're going to feel a world of pain. This could effectively be a liquidity grab now. The video I watched was it was saying, well, don't trade that breakout long because you will most likely get caught in a reversal. Well, that's true. We can see that, but they don't tell you why or how. Not in my opinion. New traders need to have their hands held, and seriously held. And these methods they're teaching are ancient. They're Stone Age, with a few bells and whistles. And what I try to teach now, because because I've bought into all that rubbish, is how to feed yourself. The only other method that I really I haven't followed for a long time either is the strat, but because it's candlestick based. So, but there is nothing wrong with indicators either. Candlesticks and indicators. Indicators worked. I've proved that over the last 47,000 tweets, and well over 4.5 years now since COVID, I think it is. That, or just about 4.5 actually, to be precise. That timing, multi-time frame analysis, multi-momentum analysis, and candle closes and stuff is the right way. And the strat candles, brilliant, But in a previous video, part one of this video, I talked about how this 3CR, the ultimate penultimate, ultimate, and the reversal candle, this one, in a downtrend should mean you should sell. In an uptrend, basically it's giving you the level that you need to break in order to consider going long. And I explained this as this went. I took my 120 points out of it, 12 pips or whatever. It went up to about 500 or 600. Came back, took out my stop, which I was watching because it was only 1% in the video. Then I said this level here, this 3CR level, the support, if it fails to hold as support again, this will not be a reversal. So all these ICT wannabes could use the 3CR in their liquidity grabs, because this 3CR here, if this fails to hold, although this isn't as good as this one, obviously that was a bigger, more momentum. You could just see from the candles. So, you know, you've got this. It's just ultra precision, ultra thought out trading, as opposed to just looking for a break of a high and then selling it willy-nilly. So there's a lot more to trading than just that, and that's why so many are failing, and they will fail. So because that's tradition, you know, unfortunately, as the numbers grow of all these noobs, as it were, then the failure rate is going to get higher and higher and higher. It's just a given, isn't it? So it used to be 86% according to the brokers. It will be more like 96% now, because there are more people being exposed to it, and it's horrendous, really. It's a cesspit, as I call it. So anyway, back to the chart. So I said this was going to go long, and I take it long, and I did take it long for another. I think I got a bit more ambitious and went for 200 points or something, 20 pips, and it finally slowed down again before the pivot at about 1200 pips. And you know, I'm not worried about the runners. I'm not interested in the runners. The runners have their job, and that is to keep me focused on what I was doing, because I do struggle with focus. You probably gathered that by these videos. So it's a real plus in my trading progression, improvement, always improving, even after 20 odd years. So we have, I've covered the arrows. Look how good they are. There, boom, there, boom, there, boom. There's no need not to wait for them. Wait for them, and you know, and then just make sure you've every other dot and I is dotted and T is crossed. And you know, this is a bad consideration for a long now. You know, it's R2. It's very good ADR. It's getting later in our day now, so I don't want to. I'm not interested in shorting this, and I'm not interested in taking another long. But while that pivot, even though it's a free indicator, it's paid for itself 1,000 times over, because that pivot was the focus of my attention for 3 full-size trades today. So how can I take them off my charts? You know, it's come back and bounced off the pivot to the pip. It's tested, and the pivot's held. Finally, the pivot's broken. For whatever reason, this decided to reverse on itself again, which you know, I talked about and traded. And what can I say? Daily open line there. That's on my charts for a reason. So we have reasons, dozens and dozens of reasons to trade, as opposed to one scary, one or two different. I mean, I know he's produced loads of them, and I'm not interested, because it's not for the right reasons, in my opinion. So, but these are ancient trading methods that work using new strategies, multi-time frame, multi-momentum trading strategies. What can I say? So everything I've got on my charts, everything I've used, I'm applying here, and in my opinion, that is the right way to trade. RRR, reward risk ratio, or whatever, however way it goes round, is one of the worst ways you can possibly trade, because it induces stress. Find a way. I keep banging on about this, but I had to find a way to enable myself to find trades almost any time of the day, trading these traffic light indicators, if you like. Green means long and in the right sequence, above zero and so on and so forth, and timed to the candle closes, and red means short in a downtrend. Green long in an uptrend, red short in a downtrend. Simple as that. And that's it. Thanks for watching. It's been a very, very interesting, successful day just trading a few. I've got a lovely handful here. I prefer to trade these because of the spreads as opposed to commission, but I love gold. And the yen pairs tend to move with the indices pairs as well, so I haven't even looked at them today. But I haven't even, this is honest, I haven't even bothered looking. Arrow, push up, pull back, continuation. Arrow, push up, probably the time of day. Smacks that, that's S something or other, S1. So we're below, where's the daily open? Way below the daily open, that'll be interesting. Might have a go at that. It might have a go at that. I won't. I don't think, but you never know. Never say never. 2Bs everywhere. Another arrow. That's even that little thing. 339 pips. These moves are crazy. So even that move up to there. It's only 5 pips. Well, 7 pips. Hasn't hit it yet. Oh, it's just about to. So momentum. RSI histo momentum doesn't repaint. That's critical. Always look left. Forgot to mention that in the previous on the US 30. Look left, and you know, I do this just to remind you guys what I'm up to. Hopefully it will just remind you. So here, just wait for that configuration here, and you know, you get to know these things. This is a bad time to consider trading. This is sideways. There's no color. So it's simple as that. That's why I've put them as grey, because it's such a great contrast with the bright green and the bright red. So be interesting to see whether that does. I've got to go out now. Be interesting to see whether that does hit that daily open. It'll be bloody amazing if it does, actually, with that sort of ADR, but we shall see. Anyway, thank you for watching. Just think outside the box, folks, especially all you ICT and SMC and all these people. They're even peddling 2B reversals as liquidity grabs. I mean, they are, but you know, why perpetuate a stupid notion when really, you know, it is just supply and demand. That's it. Anyway, thanks for watching. Have a great day, evening, whatever.